Good morning, everyone. My name is Taylor Beretta, Associate Vice President, Commercial Agriculture for Farm Credit Mid-America. We are a financial services cooperative serving 80,000 customers across Indiana, Ohio, Kentucky, and Tennessee. We recognize that the last couple of months have been incredibly challenging. However, I believe we can all think of something positive that has emerged as a result. Mine would be that I have had the opportunity to spend a lot more time with my wife and kids. It has been a great opportunity to reflect, replenish, and refocus on what's truly important. Winston Churchill once said, "A pessimist sees the difficulty in every opportunity. An optimist sees the opportunity in every difficulty." Today, we are bringing you two experts to speak to the challenges and opportunities the grain industry might face in the months ahead. We know this is a very busy time for each of our presenters, and we thank them for being with us to share their insights and expertise. Before I transition over to our speakers, I want to reiterate that this webinar is intended for the audience on today's call for informational purposes only and is not for public or media consumption. Any opinions expressed by the presenters are their own and do not necessarily reflect those of Farm Credit Mid-America. Let's get started. First, I'd like to introduce you to Michael Clark, meteorologist with BAM-WX. Michael has avidly followed and learned about the atmosphere for a majority of his life and has 10 years of operational and professional weather forecast experience. In his present role, he handles business development and assists in ensuring timely and accurate reports are issued to clients daily. He also travels the U.S., speaking to growers and producers about the impact of weather on their operations. Michael?
Perfect. Thank you so much. Appreciate the introduction and looking forward to getting right into to the outlook today. So we've got a challenging weather outlook. You know, things are, the weather models right now are at odds. And so things are a little challenging, a little difficult to figure out, you know, where we're going to go and exactly, you know, what to expect the next couple of weeks. We're at a time right now where a lot of people could use a timely rain. So we need to figure out exactly if we're going to get those rains. Okay, so let's get right into what we're going to talk about today, guys. Again, I want to just kind of review where we were last summer. I want to look at where we're going to go here over the next couple of weeks. And then I want to show you some of what our research is suggesting here for the next, you know, couple of months. So again, like I said, we're kind of at a crossroad. We really need to take a look at what's going to happen, because some places have turned dry here relatively quickly. You know, the first 16 days of June now have really featured a sudden turn for drier weather into certain parts of the Corn Belt. So, you know, last year forecasts worked out very, very well. You know, we saw that we had you know, a cooler than average summer forecast overall last year. You know, kind of ended that way. But what we really ended with last year was an excessive rainfall problem, which really has still contributed to the lower corn yields and soybean yields from last year. So, and we kind of saw that. You know, we saw that being a problem. This time last year, we were very, very wet. It was excessively wet. So again, it's a little bit different. And so what we need to focus on, obviously in the short term, is just the discrepancy in the computer model data. The first thing we notice is on the left, you have the 90-hour rainfall from the European model, and on the right, you have the 90-hour rainfall from the GFS. And you'll note that the GFS is considerably wetter across portions of Iowa, northern Missouri, northeastern Kansas, out to the same time here Friday evening by 7 p.m. But you look out here at the European model, and it is quite a bit drier, especially across Iowa, you know, which is obviously an important area, but also noticeably drier across the eastern Corn Belt, Illinois, Indiana, with very, very light hit or miss thunderstorm chances here. So certainly a different picture. Maybe some better rains across northern, northwestern Minnesota, the eastern Dakotas. But the two at this distance are you know, shockingly not that close. So in terms of confidence, as we go forward, the best area to receive around an inch of rainfall as of this morning is highlighted in green. Iowa, eastern Nebraska, Kansas, southern Minnesota. The big turning point here, guys, this is very important for everything going forward, is how these rainfall forecasts verify as we get out into the 6 to 10 day period. Essentially, you know, when we look back, today's the 16th, when we look back here 10 days out, we need to look back and see where did we end up, you know, because the American model suggests everybody's going to get 2 inches of rain, and the European model is just not the same. So it's fascinating to see differences at such short ranges. Sorry, tongue twister there, but you can see again the GFS on the left, just with widespread rains, even through Illinois, Indiana, and you go over here to the European, just much less coverage. And an interesting thing is overnight, the computer models actually, the European took a lot of rain out of Iowa. So an interesting, interesting trend that we really need to pay close attention to. You know, we're in a pattern right now where, with such discrepancy in the computer models, we can't just take these numbers to the bank and assume everyone's going to get all this rain. It's certainly not. I'm not saying it's not going to rain, because for some people it is. You're going to get a nice timely rain the next 7 to 10 days. But there's a risk here that some of these models are really overdoing it. All right, and keep in mind, you know, the crop ratings and stuff that came in below expectations yesterday, that there's really should be no surprise to that based on the weather conditions. It has been incredibly hot. It's been very windy for a stretch of 2 weeks in the central and western portions of the Corn Belt and the growing regions here. So, you know, the weather has not been favorable. It just has not been. So when we look at the best chance over the next 7 days for an inch of rain, it's really going to be focused right over central Kansas when we're looking at an ensemble probability tool. Now, what that means is the European model is, you know, the most trusted model, if you will. Over the next 7 days, it has 51 different variations. And those 51 variations will put out 51 different forecasts. And so as a meteorologist, it's important we look at all those different variations and those trends to come up with the best possible answer. And when you average all 51 together, the greatest chance for an inch of rain or more, again, is centered over north central Kansas. You can see the chances of rain over Iowa just aren't that great. I mean, it's a 50-50 shot at an inch or more of rain, okay? Which this time of year is not the greatest signal. We would expect to see something a little bit better than that. Now, this is where it gets really interesting and somewhat rare to have a spread like this in the rainfall forecast and the percentage of normal. If you look at the European model and you look here at the course of the next 15 days, and this is the European ensemble, it's got everybody dry, you know, drier than average. Now, that's not to say that you're not going to get rain. That's not what that means. That just means from a departure from normal standpoint, it's lower than average. But you go over here and you look at the American model, and it's quite a bit different. I mean, it's basically saying everybody's going to get the normal rain, and you know, it's the polar opposite. So if you favor this solution, you know, you're looking at the potential for timely rains and cooler conditions. You favor this solution, you're looking at not only rains that are not that beneficial, but you're also looking at a threat for significant warmth in the western Corn Belt that I do want to talk about. All right, so as I go forward here, let's get back to my pointer here. We'll erase these for you. We'll get to the next slide. And I think it's important that as we look at this, you can see that the GFS model on the right, over the next 14 days, keeps everybody very cool. It's almost as if there's systematically some physical errors in the modeling's ability to forecast the weather. It's actually quite interesting, because so much weight is put on this model in the trade and in the daily market analysis, and everybody that's managing their plans based off weather. this is a pretty bad computer model. It's not very good. And so its thought process is the next 2 weeks, everybody's going to be cool, you know, and everybody's going to be wet. Whereas the European model, again, not only is it very dry, okay, but it's also here in the central U.S. It's very warm. You can see that the predictions for the warmth across the western and central Corn Belt. So that's certainly something that's very interesting. That again, we need to really kind of keep an eye on here going forward here in some of these computer models. All right, so something to keep an eye on. Let's get to the next slide. As we go forward, as we get beyond these 2 weeks, now I'll tell you my favored solution here. The outcome that I favor is I don't think the GFS is necessarily correct. Again, I think it can rain at times, hit or miss, but I don't necessarily think the next 2 weeks is just cooler than average and everybody's getting rain and we're in these ideal conditions. It just does not. The pattern, the research, everything, it just really does not favor that outcome right now. So it's interesting to see so much weight and so much focus being put on that GFS model when we have the polar opposite prediction from the best model in the world, which is the European. So the weekly forecast update would tell us a couple of things. This is the week 3, the week 4 forecast from the European. And what I want to show you first off is here's week 3. Well, that didn't work out there, did it? Week 3 is on the left, week 4 is in the middle. Okay, and then the 30-day anomaly is on the right. Okay, and so what that's going to tell us is the weather really over the 30-day aggregate. But you can see in the week 3 time frame and the week 4 time frame from that model prediction that's seeing much above normal temperatures. And the precipitation patterns are hit or miss. They're not really offering up widespread relief. Now this model that you see here, this is the 30-day average, or the aggregate, like we like to call it, of rainfall departures across the area out through July 15th. Again, with the core of the warmth focused in the central U.S. and really the lack of precipitation, it bodes, it warrants concern, because I think that the chances for rain coming up in the next 6 to 10 days, may be some of the better chances of rain for a while, just kind of based on research and things that we've really kind of looked at over the course of the last couple of weeks. All right, so it's very important to eye a lot of trends going on other than just the model data, looking at what's going on across the globe and what are our major pattern drivers. So I'll sum up here towards the end exactly how I see this playing out, but know that we have that risk to see just a drier, warmer pattern evolve. Is it an all-out, just really horrible drought situation? I don't think so. But I definitely don't think the weather during prime time this year, during pollination, I don't think it's nearly as favorable as it has been the last several years. And I think we're going to start seeing issues like that surface as we get closer to that time frame, into early mid-July, okay? So what's very important is watching ENSO. ENSO stands for the El Nino Southern Oscillation Index. And essentially, you hear of things such as El Nino or La Nina. And it's the largest pattern driver in the world, whether we're in an El Nino or a La Nina. Those base states of the ocean temperatures really determine the pattern across the entire planet. We're drastically, or rapidly, if you will, getting into La Nina-like territory. Most of the global computer models are suggesting we are in a La Nina by late July into August. And so what that might mean for us is increasing that risk of a warmer and drier growing season. But there are a few exceptions to that. There are a few risks or wild cards, if you will. But generally, everything is heading in the direction of cooler than normal equatorial Pacific Ocean waters. Okay, what that means is La Nina just means the ocean temperatures are colder than average across the equator, the equatorial Pacific Ocean. Okay, so right now we know the worst of the drought has been centered across the far western plains in the western half of the country. Okay, we've seen some spread recently as well in the northern plains. And I would not be totally shocked. In fact, I'm somewhat anticipating abnormally dry conditions to surface here in the eastern Corn Belt with our update coming this week. Okay, I would not be surprised to see that at all. We've gotten very dry very quickly. In fact, areas in the eastern Corn Belt for the first 15 days of June, really all throughout here, you're running about 15 to 25% of the normal precip, some places less than that. So again, places that in central Illinois that received 6-10 inches of rain in a 30-day period a month and a half ago have suddenly gone very, very dry. And it's kind of been a shock to the system, if you will, with that. So, that kind of stuff is important. It needs to be noted. Okay, so the concern here is this may have the tendency as we get in deeper into July for this drought to kind of grow fingers and maybe spread east a little bit as we progress forward. Similar drought years where the drought monitor looked like this at this time were 02, 03, 15, and 18. Various hit or miss precipitation chances. The precip you see here into the east and the southeast really resulted from more tropical activity, okay, and more post-tropical storm systems that bring heavy rains, flooding into the eastern Corn Belt. Okay, so as meteorologists, what we do is we look at what we call analog years. We just look at years that are similar in this year's current weather pattern. They don't necessarily, they're not the end-all be-all, but they give us an idea. It's a tool in the shed that gives us an idea of what to expect here, over the course of the coming months. And it just helps us to kind of, give you generalized ideas of what to expect. You can take these years and compare them to other years and see what kind of outcome we had. Now, our favored outcome right now, or the analogs that are really performing the best, are our tropical forcing analogs. And that just tells us, basically we're basing the weather patterns off of what's going on in the tropical oceans around the world. Very important because they drive our jet streams. But those years are 1988, 1995, 02, 03, and 2010. So there's some years in there that are certainly not favorable years for growing conditions. Now, 88 obviously is an outlier. It's an extreme. This is not a 1988. The drought in 1988 actually started in late March. So this is nothing like 88 with respect to the drought and the severity of it. But where we are currently versus June of 1988 is very similar. So that's kind of how you can view a weather analog and the ideas it may offer. Now, these are just general summer analog packages, June, July, August. You can see the theme is warmer than average, and generally the theme is drier than average. That's the theme that we're going for when we look at an analog. Our updated top analogs, which I just spent the last few hours this morning updating these for this presentation today. These are the top 5 years where we believe the atmospheric conditions are matching the closest. On the left, you'll feature July's pattern. Okay, July has the potential to get very dry and really lack rainfall across the main growing regions of the country. The core of the worst heat should be off to the west and northwest. So relatively speaking, in the Corn Belt, the Dakotas, western Nebraska, you're at risk to being the hottest. But still above normal temperatures are favored in the eastern Corn Belt. The years, again, for these top 5, 88, 95, 03, 05, and 07. Again, 88, 95, not great years for corn yields. The other years were about trend line, not really horrible. And so when I talk about corn yields, I'm talking about strictly weather and the yield that came from that. I don't. It has nothing to do with how you're planting, the seed you're using, the methods all that factors in. Fully aware of that. But this is just a weather analog. We're just looking at weather conditions for corn yields here. And you can see that, again, on the left, July has the potential to be very warm and very dry. Now, as you roll those years into August, which are on the right, the heat is rather extreme potentially, but there is moisture involved. And that moisture would most likely be from tropical thunderstorm or post-tropical storm systems, or being that the way this is situated, there's a potential that you get over the top of these ridges that develop, you get what's called the northwest flow or thunderstorm clusters. They can be damaging clusters of thunderstorms, but you get moisture out of them. In fact, in 2012, some of those thunderstorm clusters are what saved some of the soybeans in the eastern corn belt. I'm not saying it's 2012. I'm just giving you a reference point of, what those thunderstorm clusters can do. They can produce a lot of wind, and they can bring hail and lightning. So while they might bring rain, sometimes they're really not that friendly. And if we get a dome of heat like this that may be possible in August, this is concerning. Again, as I said, the growing conditions, the growing weather, the forecast is not as favorable as it's been the last several years. Obviously, 2019 wasn't all that great, but just to give you some references, okay? Now, going forward, what we look at is our computer models that really match up the closest with everything I've talked about, from the analogs, and also, what models are handling the current ENSO the best? What models are handling those ocean temperatures the best versus observations? It's very important as meteorologists that we look at the observations of what the models say they should be. We look at for what models are actually performing the best. Taking the model at face value and copying and pasting is easy to do. Anyone can do that. But we really need to look at what models are performing. Again, for July, you can see the center of the heat over the central portion of the country. And you can see a dry pattern as well here across the central U.S. All right, and into August, you see it tries to remain drier east. It's also bringing heat into the central U.S. The only disagreement I have here is I do think there can be some moisture in August, but we really need to watch trends here in the short term to get more inclination of what August might feature. But these are the computer models that they're really doing the best as of right now, to give you that general idea of the August pattern. If we look at it all for July, August, and September, it's really favoring drier than average and warmer than average conditions over the next 90 days. So again, is it possible that a severe, drought can develop? I would say that on a scale of 1 to 10, we're at a 3 or a 4 for that being a possible mid to late season drought development. Again, the next 10 days are really going to tell us a lot about what we need to know going forward. And so by July 1, we're going to have a really good idea. If we look back at July 1 and we say, man, all that rain that was forecasted did not materialize. And now, as we get into July, that pattern becomes even less favorable for widespread rains. And that's where we think a problem may develop, okay? Very difficult. We're in a very, again, as I said at the beginning, we're in a crossroads right now. We're either going to, and I said this on AgriTalk with Chip Flory on the radio station a few weeks ago, we're going to go one or two ways at this point. If these rains verify and everything goes the way that the models are saying, the GFS, the American models, we're going to be looking at a record crop. Okay, we're going to be looking at very good conditions all the way around. But if the rains fail to really materialize, and as we rumble into July, we're going to come up on some problems with the weather conditions. So this is the month-by-month outlook. This was our June outlook issued back in May, and overall it's doing fairly well. it's actually a little bit too wet. We had the below average precip and the much below average precip, perhaps just a little bit too far south. At the time when we made this outlook, we were targeting Tropical Storm Cristobal that came through the Eastern Corn Belt or the Central Corn Belt, which, mind you, is the only time in early June in history that that's ever happened. That's never happened before. So that was an interesting tidbit. We had a similar situation in 2012 known as Isabel that went through Iowa, but it was later. So looking at the July forecast, you can see what the favorite is. Again, anything you see here over the top like this, you see this green going over the top, that's drawing the potential at thunderstorm clusters that can still happen over the top of the periphery of the ridge. We call this the ring of fire pattern, and that pattern can be favorable for damaging thunderstorms and some rain. Again, it's not a pattern where I see absolutely no rain. It's just one where I see maybe struggling to get good beneficial rains. Now, the August forecast, a lot of this is hinged on, we believe, a very active hurricane season is coming. While it's going to be above average temperatures, I think we really need to watch for post-tropical storm systems to make their way into the central and eastern corn belts. There's no way to obviously know if that's exactly going to happen, but if there's a risk for it, this year it's elevated versus other years. Okay? So the summer outlook as a whole, this was made back on May 20th. And obviously we can't go and change it, and I would love to change it and make it to what I think it should be right now. But full transparency, I'm very big on transparency and telling people what we have and how it's going. Full transparency right now, this may have ended up being a little bit too wet. And we're going to, again, we'll know that come July 1. The reason we have this much above average precipitation forecast in here is the idea of these thunderstorm clusters that can still happen and go over the top of this. We call them deratios or MCSs. You may have heard of them. But if we're not going to get the above normal precip in the Eastern Corn Belt, it's going to be because that pattern failed to materialize. So if I had to redo it as of right now for the entire summer season, I would have probably taken the yellow a little bit further into here and kept it drier, okay? But this outlook, again, was from May 20th, okay? Now, going forward, what are the wild cards? Well, there's a couple of them, and they're fancy technical terms, and I don't want to get into what they all mean because we could be here for hours talking about nerdy weather stuff. But essentially, guys, the big wild card is going to be the tropics. Okay. And, if you get a big post-tropical storm system up in here, you can inundate with rain with 5, 6, 7, 8 inches of rain at times. These can be big deals. That risk is there, especially for the southern and eastern ag belt, not so much the western. The AAM, which is referred to as the atmospheric angular momentum, it has since gone very negative. What this means is a negative value tells us that La Nina conditions are probably going to be felt, which means the hot and dry risks are going to continue to probably mount and increase. With each new forecast that comes in, that AAM value is more and more negative. And as that continues, I believe that risk for hot and dry will continue. And so that's something we really need to watch, all right, going forward. The other wild card is this. The Southern Oscillation Index, which is essentially, it's the measure of surface pressure between Tahiti and Darwin in the Southern Pacific Ocean. When that pressure changes, this index fluctuates, and it has a direct correlation to weather in the United States. It impacts it directly. Being that we've seen these ups and downs, what this is going to tell us is that the weather pattern still may be pushing or pulling a little bit, meaning we may get a spell of heat, and then we may get a little cool front, and then we may get more heat and a little cool front. Until this spends most of its time up in here in the positive state, which is the La Nina territory, that little up and down stuff will continue, which is why we have another little cool front coming in the 6 to 10 day in the central U.S. However, the forecasts are for this to go positive and to level out, which is again why I believe July trends that way with warmer and drier forecast risks going forward. Okay. Real quick here, I want to tell you about the risks going forward, and then we'll wrap it up. Okay. This is a look at our tropical forcing forecast, which remember I talked about. We're looking at analogs that tell us what the ocean patterns are doing around the world. All the models are really telling us very similar patterns: green, orange, green, orange, green, orange. Right? You see the green, orange look: green over the Indian Ocean, orange over the Pacific Ocean. What this is going to tell us is that other years that have looked like this feature two things: very dry conditions and very active hurricane seasons. On the left, you see the pattern in 2012 and 1988. Very similar in terms of the upward motion, the blues and the oranges, you know, this slide here that I just talked about. On the right are our top 5 most active hurricane seasons: 05, 95, 04, 17, 98. And so this pattern, very favorable for two things: drier than normal and active hurricanes. And so that's really kind of how we're saying this could all end going forward. When we look at those top 5 years, again, 2 of those featured well below normal corn yields. 3 of those had trend line yields, but they both were warm and they both were dry. Okay. Again, for reference, 88, 95, 03, 05, 07 were those years. All right. And you can see this is July and August combined. Okay. For what to expect. All right. Real quick, I'll talk about hurricane season stuff. And then if you guys have any questions, I'm happy to answer those via Taylor or however we may do that here going forward. But when we look at the hurricane season, we are forecasting a hyperactive season. Okay. Most of our hurricane analogs are pretty impressive. Okay. In fact, most of them are hyperactive years. Only 2 of them were normal or above normal. But 05 and 95 are years that continuously pop up, and those were hyperactive hurricane seasons. So this year, we believe that the majority of hurricane development is possibly going to be focused here in the Gulf, and then just right up the East Coast, just like this. I would say if there's an area that we favor the most for hurricane potential this year, it is most likely going to be into the Gulf of Mexico. Whether they go here or whether they go this way, there's no way to know. But we do forecast a hyperactive hurricane season and possibly 3 to 5 major hurricanes. So that is something certainly to keep in the background of your mind, that if we are dry come August and a big tropical storm comes in through here, maybe that's something that offers up some relief. Okay. So that's really my presentation. The next 10 days, I really want you guys to focus on what the rainfall does and how it's going to impact you. And we need to see, come July 1, we need to see, did the forecast verify who got wet and who didn't? Because as we rumble into July, that pattern becomes a little less favorable. So we have services that are geared and towards folks just like yourselves, all from your phone, from your app. If you have any interest, feel free to shoot me an email. If you have any questions outside of this, please feel free to email me. I'm happy to do that and answer those questions for you. So with that, I very much appreciate the invite here from Taylor and his team, and I appreciate your time. And I hope you all have a great rest of the webinar and a great day.
Thank you, Michael. I'd like to now introduce Matt Bennett, Channel C's grain marketing consultant and a founding partner of agmarket.net. Matt is a Windsor, Illinois farmer and former grain elevator owner whose analysis and commentary on the grain markets appears on various TV and radio stations across the Midwest, including Market to Market, Ag Day, U.S. Farm Report, and This Week in Agribusiness. Matt specializes in formulating risk management strategies for corn, soybean farmers, and livestock producers. And we are glad he can be here with us today because he brings the perspective of the producer to the table. Matt?
Thank you, Taylor. Let's get started here. Start out just talking. I've been starting out my presentation. Do we have any mulligans left? Because, 2019 obviously was a tough year, very frustrating on all counts. Not only do we have a lot of weather issues to deal with, but we certainly saw the market, race higher. People felt like it was going to go even higher. And then obviously very disappointed. Right here at this time of year is when the market turned and headed south, and boy, it was sure ugly from there on forward. And so, whenever I talk markets, I always try to talk some big ticket items just to get started with. If you've heard me present before, you've heard me talk about some of this. But one thing I want to say is, you want to stay up to date on markets, but don't watch so much and read so much that you get yourself confused. Because the bottom line is, there's a lot of people out there that are experts, quote unquote. But the bottom line for you as a producer, you have to know your farm's operation and how it's impacted by the markets. For instance, you got to put together a really good plan, a marketing plan based on your operation, your needs. How much cash you're going to need in the fall, for instance. How much storage do you have? Those things are questions you have to ask yourself. And then I want you to focus on profit instead of price. And what I mean by that is, this bean market continues to run a little bit higher. We could see $9 beans again for sure. But is $9 beans the goal? Or is it, hey, I want to make 20 bucks an acre? Because the profit per acre is going to be what's going to pay the bills. Yes, price factors into that, but sometimes we get hung up on price. And part of the reason we get hung up is the next point. We get way too wrapped up in the emotional part of marketing. Fear and greed grip us. We're fearful that if we make a sale today, tomorrow, market's going to go higher. I don't know how many people sitting on old corn and beans have told me that. I know that if I sell, this market's finally going to get able to get started. I understand that mentality, but at the same time, if you're making money, don't get too wrapped up in it. I want to stay focused in my approach, by putting an offer in and just leaving it there. So, if I think $9 is going to work for me, first of all, I don't like round numbers, but I might throw in an $8.98 for some Nova beans, or maybe even I want to see this thing at 9. But if you don't think everyone else is trying to sell at 9, I think you're sadly mistaken. Once you put that offer in, though, just leave it in. I don't want to get too overzealous. If Michael's right, and we do have weather issues coming forward, he's talking about the potential, of course. I don't want to get myself way too far on one side of the ledger. So, the sales that I make, though, how do they impact, for instance, a break even? So if I put a break even together going into the year, and my break even, for instance, is $3.50 for corn. If I sold corn earlier on in the year, how does that impact my break even? Because if I sold it above $3.50, then that means the bushels that I still have left to sell, I'm going to be able to sell below that price level. And then I always talk about using your bins wisely because, as far as our bin management goes, we can actually make lemonade out of lemons sometimes. There will be some opportunities, especially if this is a big crop. I expect the carry from December to July to be rather wide later in the year if we have that big crop. The price summary from the USDA, this just came out, of course, last week. No big changes from the USDA, but essentially $3.20 a bushel is what they're talking about for a cash price of corn. I know that's no home run. As far as soybeans are concerned, obviously, again, no home run. But these are their forecasts for this upcoming marketing year. And so whenever we get safely above those, as we are in many places for soybeans right now, we probably ought to be taking a look. It may be how does it impact us? If we know that we're able to make money, at something north of 820, by all means, we should at least be considering jumping in there and doing something. The production summary, right now, the forecasts basically are for the acreage that came out of the planting intentions to match up with trend line yields. And so a very large corn crop, if that would come to pass. This is the time of year when people are forecasting acreage. I'm going to get into that here in just a little bit, but essentially you're looking at very large crops if we have decent weather once again. So when I look at world corn supply and use, this is the first time that I look at the beginning stocks for the previous year, which was 1920. 320 million metric ton, and then you come out of this upcoming year and you're building world stocks. That is the forecast currently. It's the first year we've seen that in about 3 years. I'll show you on a chart what it looks like. But essentially what we're seeing now is that we're actually producing a little bit more than what we're using. Obviously, the market has been well attuned to that, in tune with that, and it's part of the reason we've had so many issues trying to get a rally. If I look at the world corn or the U.S. corn supply and demand ledger, basically 3.3 billion bushels is the current estimate for carryout for the crop we're producing right now. Old crop, 2.1. That's not really that burdensome. You can find that there on the chart, but 2.1 billion bushels gives you stocks to use ratio of 15%. You jump that clear up to 22%, and obviously you see why the market is struggling, because we've got more stocks versus what the usage is. Now, are we going to end up at a 3.3? I'm not sure that I would agree with that. I'll show you kind of where I'm at. If you look at, for instance, a 94.5, and I'm probably a little north of 95, but I just plugged it in for this presentation because I did see one of the major people in the market said 94.1 yesterday, but 94.5, if you have a 178.8 yield, you're still looking at a carry out at 2.8 billion bushels. That certainly isn't something that's going to rally the market sharply. But if you did have 94.5 or 94, and then some of the presumptions that we heard in the weather part are correct, and maybe you end up with a lower yield, you can see here that you can start to whittle that carryout away fairly quickly. If I look at world corn ending stocks, 3 straight years we've dropped world corn ending stocks. I want to look at that along with, minus China. And why would I do that? Because the Chinese essentially are in the news every day, and they're talking about, well, we've seen them certainly purchase a lot of soybeans. Where are they going to purchase corn? If you see what's going on in China, actually, it appears that their stocks have whittled tremendously. But if we take the world stocks with China not in there, stocks use ratio is actually rather tight, tight enough that we could typically see some sort of a price reaction. But you look at world corn and Chinese domestic use. Domestic use here and in China is big, very large. We're seeing plenty of feeding of corn, especially here this year. I do think that the quarterly stocks report at the end of the month is going to show that more corn has been fed than what people thought, especially with DDGs exiting the ration for a few weeks. It's no question that this crop overall has been a low test weight crop. And so I think that that's going to be reflected whenever we get into this quarterly stocks report coming up. Look at soybeans. So world production. If you look there, world production is forecasted to be up 27 million metric ton. The United States obviously is going to be responsible for well over half of that at 16 million metric ton. No question whatsoever that there's plenty of folks in the world continuing to want to produce as many soybeans as possible, mostly due to the robust demand that we see. And so, it's a little bit different situation when we start looking at soybean supply and demand versus corn supply and demand. If I were to look at world soybean use. So coming into this previous year, you had 112 million metric ton of soybeans. Coming out of this year, the forecast, which would be your middle column, is 96.5 million metric ton of soybeans. What's that telling us? That's telling us that we're actually using more soybeans than what we're producing. That's actually a pretty good sign. Not only in the world, but in the U.S., supply and demand balance sheets actually are somewhat friendly, somewhat favorable whenever we look at it versus corn. So if we look at old crop, certainly with old crop, ending stocks, 585 million bushels. That's not super tight by any stretch of the imagination. Now, if the Chinese continue to buy soybeans like they have lately, there's no doubt in my mind that 585 will be whittled down. If we look at new crop, 395 million bushels. That is obviously almost 200 million bushels lower than what your old crop estimate is, but 395 million bushels does not give you much wiggle room. Now, a few things could factor in here. Acreage, for instance. If we have big acres, that's going to give you a little more breathing room. But if you have a weather pattern that is hot and dry in August, there's no doubt that's when bean crop is made. You've got to lend yourself some credence there that you could be getting fairly tight as far as this carryout situation is concerned. moving forward. Now, whenever I plug 85 million acres in, for instance, just to show you a 50.5 national yield, that's only going to give you a 333 carryout using very similar demand projections as what the USDA is currently using, and that's 1.5 million acres more than what they're using. And so you got to keep in mind that, as far as soybeans are concerned, the market is taking a look at it a little bit differently than corn. Right now, the funds are actually short around 300,000 contracts of corn. The funds are actually long soybeans. And why would that be? Well, they're looking at things like this: supply and demand, stocks to use ratio. And so I look at challenges and opportunities. What are the challenges for us this year? Of course, political implications. This COVID-19 threw a major monkey wrench, in everything that we thought could possibly happen this year. From an old crop situation, corn, we felt like with low test weight issues that we had in certain areas of the Corn Belt, especially in the northern plains, that certainly had some issues getting the crop out. We had to think that you could probably look at a little bit of tightness on old crop, and then we had COVID-19 hit. But how's this going to play itself out? What are we going to see moving forward? I feel like we're kind of over the hump, but then you hear about this second wave. I'm certainly no expert here. It seems to me like business as usual continues to be more the norm every day. Political implications are something that they're going to rear their head all the way up until the election, and maybe in some good ways, maybe in some ways that aren't so good. Navigating the balance of the programs. For instance, everyone hopefully put their name in the hat, for the WIP Plus program, which was based on your 2019 production. Obviously, CFAP. A lot of folks got in on SBA loans. Bottom line is there are things going on out there that we need to be very well aware of, and you almost need to be better here in 2020, at the business side of things and knowing what money is available than anything, because certainly without those programs, without extra money, it could be a really tough road to hoe for most people. The ability to compete with the South American growers moving forward is going to continue to be one of our biggest challenges. Whenever I look at the currency fluctuations, dollar versus the real, there's no question that we struggled for quite some time. Here lately, though, we've actually seen the dollar drop. When the dollar drops, that makes our products cheaper on the world market. There's no doubt that that's going to help us be more competitive with the South Americans. But right now, there's a lot of folks that are producers in Brazil that we're going to have a really tough time competing with whenever I look at what their break-evens look like compared to ours. Land values and liquidities continue to be an issue, and our ratios have to be of utmost importance to us moving forward. We got to know exactly where our ratios lie. I'm going to look at a couple of different things that I think you need to be aware of, okay? The U.S. share of world corn production, going all the way back to 1960, we used to be about half the world's corn production, whereas now, we hover around 1/3 of the world's corn production. So what does that mean? Well, quite frankly, what that means is that a drought, for instance, in the U.S. is not going to mean what it used to mean. Are we going to get a rally out of a drought in the U.S.? Absolutely. But are we going to see prices double in price? It's very unlikely, because we know that we're not the only game in town. We know that there's other production, there's other corn available. You have to keep that in the back of your head whenever you're putting together a marketing program. If I look at the soybean production, it's even more of a drastic change. So I don't even have to go all the way that far back. And we were 75%, just 30, 40 years ago of the world's soybean production. Believe it or not, you look at where we're at today, 27, 28%. Once again, crop failure issues in the U.S. don't mean what they used to mean previously. So we have to definitely understand the impact of that, because we may not get the price reaction that we would like to have seen. Last year, we had crop failures for the most part whenever we look at corn and soybeans. And did we get a rally? The obvious answer to that's no. So U.S. corn production and consumption, essentially, we've been able to raise more corn than we've been consuming for the most part for quite some time. Obviously, genetics, have come a long way. We've been able to produce more off of the acreage that we're farming. and consumption just simply hasn't been able to keep up with it. Obviously, the export program has always been a big part, of our marketing program here in the U.S., but bottom line is we're able to produce more corn than what we consume. Soybeans a little bit different, though. As you can see, consumption has been very close to production. And so for soybeans, it's just a little bit of a different dynamic that we're looking at. It's been more of a hand-to-mouth situation. And in the last few years, boy, we have seen our export program gobble up a huge chunk of this soybean situation. So if we look at exports, for instance, okay, so you look at exports, United States here is certainly not your leader anymore whatsoever. World is, of course, in the red. The green is going to be South America, but that's Brazil and Argentina combined. They are exporting more on the world market than what we are by a fair amount. The concerning thing is that the Black Sea region is actually quite close to the U.S. And so whenever the Black Sea region, Ukraine, Russia, is exporting that much more on the world market, that close to where we're at, we know that we have to do something to earn a competitive advantage. Obviously, currency is always going to balance into that, but we have to do something to be able to get a competitive advantage moving forward. If I look at soybean exports, South America has definitely been able to take over the reins. We were trying to stay up with them for quite some time, but the issues that the U.S. has had with Chinese and the trade deal, no doubt in my mind, has had a huge impact to where we've headed south while they've continued this north trajectory due to China's insatiable demand for soybeans. So if I look at the market facilitation program payments, I look at crop insurance, I look at the kind of money that we have been able to benefit from. It's kind of a counter-cyclical, like the Farm Bill was designed to be, infusion of money into our pocketbooks. Thank goodness at a really tough time for us. But I got to ask myself, this year, of course, we've gotten money from different avenues. I think we're probably going to get more money yet after the fiscal year is over with. I think before harvest or during harvest, and I can't say definitively. I just feel like that's probably what we're going to see happening. So you got to ask yourself what's going to happen next year, because my personal opinion is you're going to look long and hard to find help next year. I think with the kind of money that we've thrown around recently, it's not an election year next year. We're going to be looking hard for a friend. So I need to be really, really solid financially going into this, as solid as I can be. So maybe I'm a little more cautious even than what I thought I might be. I want to be very cautious, know what my ratios are. I'm afraid that we're not going to see near the aid moving forward that we've seen here the last couple of years. You look at, for instance, in the state of Illinois, of course, I look at Farm Doc a lot, but Farm Doc actually takes a lot of contribution from Purdue, for instance, several schools in the Midwest. But if I looked at return to cash rent farmland this year, 2020 going into 21, I mean, you're going to look long and hard to be able to find good return on average cash rent. So we have to be very cautious there. No doubt about it, if we're heavy on cash rent, that it's going to be a very challenging time for us here at this point in time. If you do get some sort of a major weather event, it can certainly change that outcome, but you don't want to be sitting in a situation where you've marketed way too much and not managed the risk of the market potentially going higher on you. If I look at for instance, the maximum growing season price. So let's just look at crop insurance real quick. 388, typically you're going to see the market is going to, during the growing season, be at 388 or above. Since 2000, it's been at that price level or above every single year. Is it going to be this year? Am I calling for 388 corn? No, not without major weather issues. Not without the Chinese maybe coming in and buying some corn. Maybe you dial back acreage a little bit, but this is what we've seen in the past. So you have to understand, some people look at the historicals and that's how they end up putting their trading programs together. This is what we've seen happen in the past. If I look at it, the minimum growing season price versus projected insurance price, we still have a long ways to go as far as the growing season is concerned, but the minimum price certainly isn't at the bottom of the barrel here on that particular chart. If I look at an average growing season price, so far, obviously, we're bringing up the rear. I mean, it's been rough. Are we going to be able to see this market rally to where our average growing season price versus the insurance price gets better? It remains to be seen. I'm like Michael, if the weather doesn't change here in the next few days, and this drought continues to expand, this is all going to change, okay? But if we do get this infusion of rainfall and we keep moisture in the atmosphere, you guys know once you get dry, it's tough to catch a rain. But if you're catching rains, sometimes you can stay in that rut. If I look at the range, I mean, right now, of course, 2020 hasn't even gotten up to that insurance price. I'm big on insurance price. Part of the reason is right now, if you take today's price times a normal yield, there's going to be people, if they have a normal yield, that would collect, because if they've got 90 or 95% buy-up, there's no doubt that they're going to be able to collect because we're so far below the insurance price. But that's where the range looks like today. So recommendations, as far as old crop, I'm ready to move on some of this corn. I don't have much left though. And all my recommendations I will quantify are based on my farm. Okay. I don't make broad assumptions for anyone, but I will talk about the general trend of the market. I think that this market has the tendency to be able to rally in here, especially if we get some sort of weather. Typically we get a weather market, but as far as old crop's concerned, there's a lot of old crop out there. Basis has actually narrowed a little bit here lately, which has been nice to see. What's it going to do if we get a rally? It's probably going to widen. Why? There's a ton of corn out there. Keep that in the back of your head. Understand the way that dynamic works. So if we get a rally to 340 or better yet 350, yeah, I think that I'm going to be done with my old corn. Am I going to be holding on to some sort of ownership? I know a lot of folks have bought cheap calls in the event that we would see some sort of a weather situation. I don't have any issue with that, but quantify that risk. Don't lay too much risk out there. I have a tough time selling new crop right now, because if you sell right now, you're making the assumption that you're going to have either a huge crop or the market's going to go on lower, and you're going to collect, a PLC, you're going to maybe collect crop insurance. If the market moves higher and you've sold too much, and worse yet, you don't raise a crop, that's going to be a rough day. Be very cautious as to get too far on one side or the other here. Manage your risk and make sure that you stay as balanced as what you can in your approach. Bean recommendations. I mean, I'm sold on old beans, but I'm looking for a little bit more of a bounce. In my opinion, we could see $9 beans for both July and for November moving forward with any sort of weather whatsoever. I kind of expect to see it, but whether we will or not remains to be seen. I feel like November beans certainly are going to have a chance, to get back to that $9 level. I'm not going to sell anymore. I'm 25% sold there. I'm 30% sold, on new crop corn. And so just to give you an idea, my corn, we're at 405 basis to board. Beans, I believe we're at 960 basis to board on 25%. But keep in mind, how much money do you need during harvest? So I know we're about to run out of time. I know several of you probably already get like this newsletter that I put out. You can take a screenshot or take a look at this. You just text that, text grain to channel, but I do have a profitability app. I've got several different things going on, but certainly email me any questions that you have. Before I wrap up, I just want to put my risk disclaimer so you can't hold me liable for anything that I said today. But Taylor, if you want to take up the reins since we're pushing on time, I sure appreciate you having me today.
Yeah, thanks again, Matt. We really appreciate you taking the time to be with us. And thanks again to both of you for taking the time to vet the information and sharing it with us in a way that it can be applied. Thank you to all of our customers, team members, and industry advocates for carving out time to be here as well. If you have specific questions for Michael or Matt, please email them directly. If you did not get their contact information, we will be sending out copies of their presentations once the webinar concludes. If you have additional questions about Farm Credit Mid-America, feel free to reach out to one of our local offices, or you're more than welcome to send me an email, and I will do my best to get you connected with the right people. It's been a pleasure to host all of you. Please know that we value your business and your families throughout the coming weeks. Enjoy the rest of your day, and God bless.